Hello everyone, welcome back to my YouTube channel. So in the last class we learned about interest on capital, right? So in today's class we are going to solve one practical problem under interest on capital. So let's start it. See, Josh and Krish are partners sharing profit and losses in the ratio of 3:1, and their capitals at the end of the financial year 15-16 were rupees 1,50,000 and rupees 75,000. See here in this problem they have given the closing capital. See, capital at the end of the financial year, but for calculating interest on capital we need opening capital, right? So for that, in this problem first we need to find out the opening capital. Now next, during the year 15-16, Josh drawings 20,000 and drawing of Krish were rupees 5,000, which had been duly debited to partners' capital accounts. It is duly debited to partners' capital accounts. Clear? So this one I will explain when solving the problem. Profit before charging interest on capital for the year was rupees 16,000. Profit, that is rupees 16,000, and the same had also been credited in their profit sharing ratio. And Krish had brought additional capital. How much? 16,000 on October 1st, 2015. Now calculate interest on capital, additional capital of rupees 16,000. Calculate interest on capital at 12% per annum for the year 15 and 16. So this problem that is only related to calculation of interest on capital. Here they have given the information about drawings, but we should not calculate the interest on drawings. This is only on interest on capital. See here, interest on capital, calculate interest on capital at 12% per annum for the year 15-16. So you have to read the problem very carefully. Clear? Now what is the first step? First step, here they have so before that, see, this problem, it looks very confusing, right? So first what we have to do, we need to write down the given information. So like this, first one, it is profit sharing ratio. How much? 3:1. And now closing capitals. Josh 1,50,000, Krish 75,000. And drawings. Josh drawings 20,000 and Krish drawings are rupees 5,000. Now profit before charging interest on capital, how much? 16,000, already credited in capital accounts. After that, additional capital introduced by only Krish, how much? 16,000, and a rate of interest, that is 12%. Now share of profit. Now we need to calculate the share of profit in the ratio of 3:1. The profit is 16,000 and ratio is 3:1, means 3/4 to Josh and 1/4 to Krish. So see here, Josh 16,000 into 3/4 rupees 12,000 and Krish 16,000 into 1/4 4,000. Clear? So this is the given information. Now next what we have to do, we need to calculate the opening capital, because for calculating interest on capital we need opening capital, right? So let's calculate the opening capital. See here, 1 minute. Yes. See, in opening capital what we have to do, in calculation of opening capital, just we are going backwards from closing capital to opening capital. So listen very carefully. In finding out the opening capital, we are going backward from closing capital to opening capital. So we have to reverse the effect of all transactions that happened during the year. We need to reverse the effect of all transactions. Clear? So first what we need to write down? Closing capital. So plus add drawings. Add drawings. What we will do? Actually drawing means withdrawal. Right? Means actually we need to deduct it. But what we have to do in finding out the opening capital, we need to reverse the effect of all transactions that happened during the year. So that we need to add drawings during the year. First write down capitals. 1,50,000, 75,000 and add drawings during the year. Now here I will explain through one example. Why do we add drawings? First one, that is drawings. Why do we add drawings? See, drawing reduces the capital balance, right? See, for example, our opening capital rupees 1 lakh and drawings rupees 10,000 and closing capital, how much? That is rupees 90,000. Clear? Now, to find out the opening capital, means here we don't know the opening capital. We know only drawings and closing capital. From closing capital, that is rupees 90,000, what we will do? We must add back. We must add back the drawing. So 90,000 plus 10,000. So we will get rupees 1 lakh, that is opening capital. Clear? So I hope this is clear to you all. So add drawings during the year 20,000 and 5,000. And here, see here, they said, here they have given the information that the drawings of Krish were 5,000 and Josh 20,000, which had been duly debited to partner's capital account. Duly debited to partner's capital account means the drawings already been distributed among the partners and entered in their capital accounts. Clear? A debit that reduces the capital. So, since it has already reduced the closing capital, but while finding the opening capital, add back the amount debited. So, they said here the drawings, they are duly debited to partner's capital account, means they are already entered. So, one more trick here is to find out the opening capital. If in the question they gave anything debited, then add it. Clear? And anything credited, deduct it. Clear? So remember this rule. Now next one, less profit. So less profit. Here we have added the drawings. We got Josh 1,70,000 and Krish 80,000. From that we need to deduct the share of profit. See here, share of profit. Here we have calculated our profit, that is rupees 16,000, and which is already credited in capital accounts. What I said here, the rule is already credited means deduct. Debit means add. So credited. So deduct the share of profit. Here profit that is already credited means profit has already been distributed among the partners and entered in their capital accounts. Clear? So anything credited to capital accounts, deduct it. So deduct 12,000 and 4,000. So write down 12,000 and 4,000. That is rupees 1,58,000 or and Krish, that is 76,000. And again I will explain this profit through one example. Same as drawing. See, profit increases the capital balance. Right? See, for example, opening capital 1 lakh and profit 20,000 and closing capital 1,20,000. Now to find out the opening capital from rupees 1,20,000, we must subtract the profit. So profit 1,20,000 minus 20,000, that is rupees 1 lakh. Clear? So I hope this is clear to you all. Now next, less additional capital. Less additional capital. How much additional capital? That is rupees 16,000 introduced by only Krish. So write down here 16,000. So then we will get capital in the beginning. That is Josh 1,58,000 and Krish, that is rupees 60,000. Clear? And plus loss if any. If there is any loss, what we have to do? We need to add. If there is profit, we need to deduct. Clear? So I hope this is clear to you all. In this way, we need to calculate the capital at the beginning. Just we need to reverse the effect of all transactions that happened during the year. Clear? See here, in this problem, only drawings during the year they have given. Since there is no rate of interest on drawing is mentioned. Here they mention only the interest on capital. Right? So we simply add back the drawings while calculating the opening capital. If the question had said, for example, interest on drawings at 10% per annum, then the interest on drawings that would already have been debited to the partner's capital account. So in that case, while finding opening capital, we would add both. Clear? Both means closing capital plus drawings here. Closing capital plus drawings plus interest on drawings and minus profit minus additional capital. If it is given in the problem, but here they have not given any interest on drawings. Just we need to add the drawings. No interest on drawings. Clear? So I hope this is clear to you all. Now we have calculated the capital at the beginning. Right? Now we need to calculate the interest on capital. Now, first we need to calculate the interest on capital on opening capital. Now it's easy to calculate, right? So opening capital, Josh, first one. That is how much? Opening capital of Josh 1,58,000 and Krish, that is 60,000. So our interest on capital, that is 12%. See here. Opening capital Josh 1,58,000 into 12%, 18,960. Clear? Now Krish. Here Krish introduced additional capital also. So don't forget to add that one. So opening capital how much? 60,000. Interest on capital 12%. That is 7,200. Now additional capital interest. How much? He introduced additional capital 16,000 when? October. So from October to year end. October, November, December, January, February, March. Means 6 months. Right? So 16,000 into 12% into 6 divided by 12. That is equals to rupees 960. So what is the Krish interest on capital? First on opening capital 7,200. And next additional capital 960. So total 8,160. That is the interest on capital of Krish. Clear? So this is the solution. That's it. First we need to calculate the opening capital. That's it. After that it is easy to calculate the interest on capital. Clear? So I hope this problem is clear to you all. If you have any doubts in this problem, please leave a comment. Thank you.